seen a 700% spike in gold delivery from last year, same time, and which is May's usually a quiet month for gold. We've seen the largest delivery in the history of the COMEX market. Last I looked, it was over 16,000 contracts at 100 ounces apiece. People are institutions, whoever the heck it is, U.S. government, Treasury itself, I don't know. They're standing for delivery at a level nobody has ever witnessed before. 16,000 contracts, Adam, is $5.3 billion worth of gold.
Wow.
The largest delivery in the history of the COMEX market, not just in gold, but also in silver, too. So there's a huge demand for physical holding of gold and silver. And you look at, the gold price that gets knocked down by $200, $100 for 2 days in a row nearly, and it shoots right back up. That's strength and resilience that I have never seen in 35 years. So to me, the physical demand is overwhelming the paper price. And this is, I was reading something on X the other day, a comment, if you will, between Vince Lancy and Luke Groman. And, Luke said, now imagine what happens if it was the U.S. government bringing back that gold, and the response to all the commercial banks, because they were basically saying that there was, it almost looked like a sell-only market, that they were a coordinated fashion, that they got together with the managed money and said, this is about to blow up the whole market. There is no more buying allowed, only sell only. And that's what he was intimating. And he says, in response to the above from the U.S. government is FU, he says, send us more gold next month too, and more behind for July, August, and September. And Vince Lancy says, it was, Luke, it was. No ifs, ands, or buts. Bullion banks to cover the Treasury, calling it back, or the Department of Treasury itself, it most certainly was. Now, these are two of the smartest guys in the world. And basically what they're saying is that it's the U.S. government bringing all this gold back in. And if you look month over month over month over month, just the month over month increase since last year, if you can see that, COMEX gold delivery. This is not something that is just an outlier in 1 month. Month over month over month over month over month, and really this goes back to November. Okay. So when you talk about where we are, I would just simply say the biggest money in the world has been using any sign of weakness to stand for delivery and to accumulate more, and the price keeps going higher and higher and higher. It's not just here. You look at what's happening even in China too, and the numbers are off the charts in China. I think they bought the amount of gold that they just bought was an 11-month high this last month. I think the best of what we could expect to see in gold prices is still, and silver, is still way in front of us. The previous administration had no affinity to bringing gold into the COMEX, certainly. So it would have only been trader based. This is something different. And this really happened since November of 2024. So I don't know for sure, but if I were betting in Vegas, I would say it was almost inverse of what we're seeing here. The conventional wisdom was that it was tariffs and arbitrage. Okay, there's a little bit of that. That's fine. But this is far different. That's the cover, if you ask me. And, you put it in context, for example, with President Trump's tweet on Easter Sunday, the golden rule of negotiating, he who has the gold makes the rules. Really, that's interesting. You put it in context with Treasury Secretary Bissett, who is a self-proclaimed gold bug, by the way, and whose largest holding in his last job running a hedge fund was in gold, that there would be a new monetary system implemented within this administration, a new Bretton Woods, he said. So, when you put all of these things together, you've done an interview with Judy Shelton. We've talked about that, her idea of backing treasuries with gold. She told me, I don't know if she told you, but she told me flat out that Trump told her that he would issue gold-backed treasuries on July 4th next year, the 250.
I did not hear that. That's actually really interesting. Okay.
which is the 250th year anniversary of the country. She told me that, that he told her that. Now, what does that mean? You know, maybe he changes his mind, but she's a very bright lady and more or less says that that's what she was hedging at. And so I think that there's something far more important happening with gold, far more happening with gold. And, you know, you talk about like the smash in these markets. Well, the silver smash, 60 million ounces of silver on paper were dumped in 1 hour last week when the price got smashed. It's a sign of desperation, maybe to cover physically. I don't know, because here we are, the silver price is right back up. And I just think that this is something far different than the media is portraying. Certainly it's a lot more than tariffs. That I would bet, I would bet just about anything against. And you think about this, you know, this trade deal, it's like it's two drunk guys holding each other up from falling. It's the largest debtor nation in the world selling its debt to the second largest. It's silly almost, you know, that are buying each other's debt is really what it is. And what you're saying is true. At the same time, the United Kingdom, right as they made that announcement, has surpassed China in the second largest holder of our treasury debt. So they're continuing to buy our debt as we buddy up. They're now number 2 as China has slid to number 3. So it's the two of us are holding each other up, and the two most indebted nations in the world buying each other's debt with freshly created money is just kind of silly to me. We're supposedly implementing quantitative tightening. And then quietly last week, in the midst of China selling bonds to, you know, they're down to 740 or 50 billion in our treasuries. They were up just under 2 trillion at one point. As I mentioned, the UK has now slid into number 2. So they've been selling treasuries for a while. Net since 2014, there's been no central bank new buying of treasuries. They've been buying them, but more selling than buying. And China is right at the top of that. Of course, you got Japan up there threatening, saying that selling their treasury stock is on the table. And you could very well see that. But you talk about the Fed coming in and implementing stealth QE. They bought 20 billion in 3-year treasuries on Cinco de Mayo on May 5th. They bought 34.8 in 10-year on the 6th and 7th, and 8.8 in 30-year. That's a lot more than just maintaining a ratio. You know, that's a massive, almost $44 billion in treasuries, and they do it in a very stealth manner. It just seems to me that the demand for the long bond is drying up. Same thing you're seeing in in Japan right now. And they step in to prevent, I don't want to be as dramatic as saying a failed auction, but it's plugging holes in a sinking ship without calling it a leak is really what it is, as far as I'm concerned. And yet rates continue to go higher. And what's really impressive is that even in the face of rising rates, we see gold continuing to move higher, which goes to show, as far as I'm concerned, a lack of demand and or trust in institutions such as the bond market, such as the Federal Reserve, such as the US dollar. And there's just more demand for lack of counterparty risk assets in your own possession, like gold. And we're seeing that at the highest levels. How high can yields go in a system that is losing trust? You know, do you want it? Does the yield really even matter at that point, I guess? And so it's more along the lines of who's issuing said yield, and you know, yield there will be demand at a certain yield, but you know, I think anyone who would accept a 4%, 4.5% yield on a 10-year treasury right now, you know, you have to think twice about that. The dollar's lost 9% this year alone, let alone the money creation and the inflation. So you look at last year as an example, the 10-year treasury earned 4%, gold was up 40%, no counterparty risk. You look at the last 25 years, gold has doubled the performance of the 10-year treasury, no counterparty risk. This is the trend that I think is being realized by central banks, that holding our debt is not really what it once used to be. It's a system based on trust. It used to be backed by gold. But, you know, I did an interview with Ronnie Stofferly the other day, and he said where we are, it's like your wife came home, or you come home and find your wife in bed with the pool boy. Do you ever get that trust back? That's the way the world, I think, is looking at the Treasury on many levels, not only monetary and fiscal irresponsibility, but also the sanctions and these tariffs, which are almost tariffs that underneath are really sanctions. And this is an issue of trust, or maybe loss of trust in the system. And why would you want to hold a debt of a country that, he mentions 37 trillion in debt? Well, but that doesn't take into account the unfunded liabilities. And so when you talk about a 37 trillion in debt, and Moody's says, well, one of the reasons we're going to do it is because debt to GDP is projected to hit 134 by 2035. You add in Medicare, Medicaid, Social Security, and the government and military retirement plans and pensions, you're way north of 200. And there's never been a country that's crossed 130, to my recollection, that's ever come back without either hyperinflating or outright defaulting. People don't understand how big those numbers are. 1 trillion seconds ago was 31,688 years ago. And that's just 1 trillion second. And you talk about other reasons why people wouldn't want to hold our debt. Aside from the weaponization of the Treasury market with Russia, and I put that in context. Look, I'm a proud American and a patriot, and this country's given me opportunities that, frankly, I wouldn't have found anywhere else in the world, and I fully understand that. But look at it from the other side of the world, their perspective. We invaded Iraq 21 years ago, and we're still there, and we were there for what ultimately was false pretenses, and we're still there. We didn't say we're sorry. There were no consequences for destroying their country. And so when you talk about going in and seizing Russia's $5 billion in treasuries and using it to fund the Ukrainian war, largely in the form of weapons against the country they're in a war with, that's a tough line to come back from.